What's up, everybody? This is another episode of the Mortgage Pro podcast. This is our podcast for mortgage pros by mortgage pros to make better mortgage pros. I'm your host, Eric Braun, and today we have a special guest, Miss Megan Anderson. Megan Anderson has a long, successful career. She works for MBS Highway, which now purchased list reports, and she's an expert when it comes to the market. So we go over a lot of stuff in this episode, the mindset, her story, as well as some of the stuff that's going on in the market today when it comes to rates, inflation, job data, property appreciation, just a lot of really, really good information for you guys. And I hope you enjoy. Remember to like, comment, and subscribe. Miss Megan Anderson, how are you?
I am doing fantastic. Thanks for having me.
Thank you for coming on today. We were just talking offline. Last time we did something together was during COVID. I kind of brought you on. I didn't have a podcast then, but we shot a few videos or a video together about the market and what was going on. So I always appreciate your insight and expertise. So I know the viewers are going to get a lot out of today. First, let's start with who you are.
All right. Well, my name is Megan Anderson, and I'm the VP of Client Relations at MBS Highway, which is a platform for originators, helping increase their level of conversion through education and various co-branded material. And I'm a public speaker, which has been really fun. That's evolved over the past 4 or 5 years now. Probably one of my favorite parts of my job. And I have a podcast as well, launched a new podcast since the one that you were on. Now it's called On the Highway, because we did rebrand MBS Highway. We bought out List Reports and rebranded as Highway. And it's been fun taking the podcast on the road.
That's awesome. Let's jump right into that. So talk about, give me a better rundown of what Highway is now, what you guys were, the acquisition or the merger or the buyout of List Reports. Tell me a little bit more about that.
Yeah, so it happened probably around like 8 months-ish ago. MBS Highway acquired List Reports. And for those that are listening that don't know what List Reports is, it's ultimately a platform for agents and originators. Agents can get on there, they get access to a shareable library where they can have as many graphics as they want to go ahead and brand in their own colors and post on social media. And they also get access once they pair with an originator on the platform to things like our marketing kits, which are going to provide everything that you need to market that home, from single family property websites to QR codes to flyers to postcards, you name it. And then as far as on the origination side, there is an awesome aspect called agent intel, where you can get a little bit of intel on your real estate agents. You can look them up, see who they're doing business with, the amount of business that they're doing, the types of transactions that they're doing. You can see what they have going on the list side, on the buy side. And then now you can automatically send some of the pieces from MBS Highway on one of their active listings to really just help provide value. And as an originator, to make sure that you are going after and spending your time building relationships with people that can actually bring you some business.
Right, the right agents. And I do not get paid to say this, but I do strongly recommend both products. MBS Highway is great and List Reports is great as well. So little plug early in the episode, but tell me a little bit more about you, Megan. How did you get started? And tell me, a little bit of the story on how you got to where you are today.
So we all have an interesting story. I absolutely love this question because none of us woke up and said, I want to be a real estate agent or in the mortgage space. And my story is very similar. So, I grew up in a small town called Cody, Wyoming, which is where I'm at right now filming this episode. And, growing up, my mom, she was the vice president of the local bank here, Pinnacle Bank. They're actually letting me crash and use their office space while I'm working here, which is awesome. Nice. Yeah. But, I grew up realizing what the space involved. My dad was a builder. My mom was in the origination side. And I always remember growing up, I was like, oh, I am never going to get into this space. One thing that I think isn't talked about enough in this space is just the cycles of stress that are involved in having this job and how that impacts not only yourself, but your family. And so just growing up, seeing my mom stressed and always busy, I was like, I'm never getting into anything like that. But then life happens. So I went to college, and in college, I was trying to go pre-med. And that's what I got my degree in. I was thinking about going to medical school, but decided to not do that. And during college, I started doing personal training. I was working at a local gym. And then when I left college, I decided to just branch off and keep my clients and start my own personal training company where I coached people to step on stage for bodybuilding shows.
Oh, wow. I didn't know that.
I myself competed in shows as well. And I was living in Vegas at the time. And my roommate that I had was crazy. Like, I could not stand. I mean, I met this roommate off of one of my guy friends when we went there and were visiting, ended up hooking up with this girl off of Tinder or something like this. This is how I met this girl that I moved in with. So,
And you decided to shack up with her?
Yeah, well, I was just out of college. I was like, I don't want to go home. And it just so happened. And so I ended up rooming with her for a while. And then it wasn't good. So I said, okay, you know what? I was a few months out from trying to compete to get my pro card. And I was like, I don't want to leave just to have to come back in a few months. So I went on Craigslist and I decided to find a place just to get that didn't have to be long term. Well, turns out that I give this girl 3 months cash, which is all I really had at the time to my name, right? I give her 3 months cash to move into her place. I'm unpacking all my things. I'm excited because it's the first time that I'm living by myself. And all of a sudden the AC stops working. And I'm like, this is weird. And then the next day I wake up to an eviction notice on the door. And at this time, a little bit before that, actually, when I was launching my own personal training company, I was picking up different gigs. And in Vegas, it's really easy to do that because there's different conferences all over the place. And so I ended up working the mastermind event in Las Vegas, one of the largest real estate originator conventions out there. And that's where I met everybody, all the OGs. I met Barry, Tim Brahim, all the OGs of the space. And Barry at the time, Barry and Dan were trying to get me to come work for them, to come do events, work the booth, things like that. And so all this stuff is going down with my eviction. And I'm talking to Barry on the phone. He's like, you know what? Just come out to Jersey. Just come out to Jersey, work for MBS Highway. And also in the middle of this, I was kind of falling out of love with what I was doing because I always got into the personal training realm because I wanted to help people feel more confident and comfortable with who they are. And I started to realize that it became an unhealthy cycle within myself and also an unhealthy cycle within my clients. They would love themselves when they were show ready, but then they wouldn't. And it was just kind of this abusive behavior of overeating, binge eating, restricting. And so I was like, you know what? I'm done with this. I'm ready to try something new. So I sold all my belongings for the most part, sold my car, got on a plane and went out to New Jersey. Wow. And the corporate office is in Homedale, New Jersey. And I remember getting off the plane. I was like, okay, this is going to be like Jersey Shore status. I don't know what to expect here. There's going to be a bunch of Guidos, people walking around orange and, but it wasn't. If you've been to New Jersey, it's very ugly when you land in Newark and there's factories and smoke everywhere. But the second that you get out to where the office is at, it's kind of rolling hills and it's nice and it's green. And so I lived above a hair salon, Denny's hair salon. He actually does sales for MBS Highway as well. I lived above his hair salon for a couple months until I ended up getting a different place. But that's how it all started. I started doing sales at MBS Highway.
And then what happened? So it's a lot to take in. You grew up in Wyoming, then went to Vegas, met all the OGs as you discussed, which, you know, we'll talk about Barry in a little bit. You said, I might as well give it a shot and go, and you went to Jersey?
And I went to Jersey, yeah. And so I started as just a sales position, and I absolutely hated it. You know, I wasn't sure what I was doing. I felt like I had lost my purpose. And to be honest, as a millennial, I really hated calling people. I remember getting so nervous when I started. I would sit there and kind of map out, okay, this is how the conversation's going to go. I would type out everything that I needed to say before I would call these people. And, you know, then I started to get more comfortable with it. I started making some sales, which always feels good. And the company has, you know, it started off, we're a lot bigger now because we acquired List Reports, but it started off as kind of a small company, a lot of family and friends within the company. And Barry always kind of provided this opportunity in this environment where you could feel heard and you could express yourself and your thoughts. And so, you know, upon doing demo after demo after demo of the product, I started to realize that, you know, there was a little bit of lack of education. People would say, wow, you know, I watch your morning update video every single day, I get the lock alerts, but I had no idea that all of these tools existed. And so I started to think about, okay, how can we solve this problem? Now, at the time, they hated when I would send out mass emails. And so that's when I created the Facebook users group. And that grew exponentially. And it was a great way for us to be able to educate individuals on when we were having a webinar, when we, you know, launched a new tool, when we did a new update. And then I started to really like my job a little bit more and find a little bit more purpose in it. And then I started doing a lot more of the webinars. And meanwhile, I was still traveling around with Barry and the crew to different events. And at that point in time, Barry would always push me to speak and get on stage a little bit. And you know how they say this public speaking is one of people's greatest fears, like they fear it more than dying. Mm-hmm. Well, that was the case for me in the beginning. I remember the first time, and originally when I would get on stage, I would do this segment called Megan's Mindful Minute, where I would plug in, you know, all my past knowledge from personal training, mindfulness, things like that. And it was awkward at first. I remember it being very awkward, you know, to come in and speak about health at a mortgage sales convention. You know, I remember people at the time would be like, where does this fit in? But I was really grateful that Barry made me do that because it got me comfortable talking in front of people. And it, you know, over time and continuing to do that, I think it helped my own mindset in a way, because I was always used to stepping on stage, right? But I was stepping on stage in a bikini, letting people judge my body image. And for the first time, it's like people were judging my intellect. And it was a really healing process for me, I gotta say, and it was really quite empowering. And so I started to really kind of feed off of that and learn to trust and believe in myself a lot more than when I started. And then it just kind of continued to evolve. Then Barry asked me to, this is years ago, he asked me to start being on the morning update video, which is a video that we put out to all of our subscribers, breaking down the different economic reports and housing reports. And this was like a whole different type of speaking. You know, it wasn't give a memorized demo of a product that you could give a demo with your eyes closed. This is, right. Okay, you have to understand all the data and everything and how to break it down, how that articulates to where the market is headed. And you have to be able to understand that so that you can communicate it.
So for those that are watching that don't know the MBS Highway or the rate lock alerts or the morning updates, give a little bit of context of what you're talking about.
Yeah, so there's news out there every single day that gets released. There's also monthly reports like inflationary reports. Like this week, we get a lot of housing reports, existing home sales, pending home sales, permits. You know, there's all these different reports that come out. And they're all going to affect what is going to happen to the market, and in turn, what is going to happen to mortgage rates. And so it's about taking that knowledge and being able to look at that report and dive in deep to be able to kind of forecast, okay, what could potentially happen to the market so that we can prepare all the originators to either lock or float their loans to ultimately help the client get the best rate out there.
So if you had to speak to an originator that was, let's say, they wanted to learn how to understand this stuff, and you being, somebody who literally had to go through that process in order to deliver that information on that morning update, what would you suggest to them if they want to embark on that journey of understanding the economics behind what we call the mortgage industry?
Well, I will say one thing that helped me tremendously is we have a course, Certified Mortgage Advisors, and I went through that course and I took, you could just sit there and do the whole toilet bowl flush and probably pass and, whatever. We did that in high school, we did that in college, but you have to first be willing to want to learn. And if you are willing to learn, then you have to do the work. And taking that course, it allowed me to kind of break it down into bite-sized pieces. And I would sit there and I would write out what the report was. I would write, what is important to look at, why it matters, how it could affect it. And I kept all of this in the time at a Word document. And then, you can look at what news is going to come out the following week. So I would then take that and I would, reference back to my notes to kind of understand before it even came out. Okay, this is what's coming out. This is why it's important. This is what to look for. I would look at, okay, what was the past report? How did that come out? And look at the expectations. What is the market expecting? Because that's really the biggest key into how the markets are going to fluctuate. And it just took a lot of repetitive time and doing. I had to sit there and I had to do it. And while many of you that are listening, you might not have the opportunity to do the morning update like I do on MBS Highway, you have the opportunity to create social content that covers these things for your clients. You have the opportunity to do a weekly market update for your clients. And another way to learn too, if you already have MBS Highway, but you don't want to sign up for CMA, is just watch that morning update video. And when you don't understand something, pause the video and Google it, or, go into Chat GPT and ask it what you need to know about it, right? But take the time to understand it. It's the same thing when we're reading a book. If you don't know what a word means, don't just go past it. Stop, understand what the word means, and over time, you're going to start to build up the list of language in your mind.
I think it first starts off with the desire to learn and desire to be better and to desire to hone your craft. And I feel like some people have that and some people don't. The cool thing about creating content or being forced to do those Monday updates, not forced, but asked to do those Monday updates like you were asked to participate in, is when it's your job to deliver information, whether it be on social media or elsewhere, a not talked about side effect that happens is you're kind of forced to level up. I know for me, like before, especially if it's a video about the market or LLPA changes or whatever industry news has hit, is breaking. I first take time to completely understand it. And without my need to put out content, and for me, it was the opposite. Like I needed to put out content, so I needed to learn this stuff in order for me to be comfortable speaking about it. So a lot of people don't talk about that side effect of creating content. It like forces you to level up your game. So it's interesting that you had that experience, because I've had the same experience just with Instagram or creating videos. Now, before we get into what's happening in the market today, because we can spend a lot of time on that, and I would love to hear your insight, and I know all of our listeners would love to hear your insight as well. Tell us about Barry. Tell us about who Barry Habib is, how it's like working with him. Just give it, because I know he's somebody that I look up to and follow, and many people in the industry do as well. So give us a rundown on Barry.
Barry is such a wonderful man. He has such a big heart. I think he has the biggest heart of anyone that I know. I mean, you could meet Barry and he'd prefer to give you a big old bear hug than shake your hand. It's just the kind of man that he is. And he's so giving of his time. Like, here is this man that has been one of the top people in this industry for a long time now, 20, 30, how many years? It's been a long time. And he's one of the top real estate forecasters out there. You've seen him on CNBC, you've seen him on Fox. He used to have a show on CNBC even for like 10 years. I mean, this man is such an influential man in this space. And he's been such a great person to work for. He's been challenging. Do not get me wrong. He is very challenging. He expects the best from you. And that's, kind of a two-edged sword on some levels because, on one level, it gets you to up your game because you want to make this person proud. He's the kind of person where, it kind of reminds me of, your parents. At the end of the day, you want to do what makes your parents proud, and you're willing to put in the work to make them proud and achieve these goals. Now, Barry always told me from the beginning that he saw something in me, and he took the time to teach me things. Everything that I've learned from him, the fact that now I travel around the US and I give keynote speeches on the market and where we're headed. I mean, none of that would have been possible without this man being giving of his time and teaching me things. Now, it can be a little challenging at sometimes. There are days where you're more receptive to criticism than other days, depending on what else is going on in your life. And some of those days where a lot of stuff is going on and, Barry's trying to get you to be the best that you can be, it can be very challenging. I have broken down a time or two. I've cried a time or two. But at the end of the day, that it's because this person wants you to be the best that you can be. And so you get over it and you move forward and you keep improving. And, he's such an inspiration in the fact, like these ideas, I've watched him take just an idea into implementation time and time and time again. And he inspires you at the end of the day to see what is possible. And my favorite thing about Barry, I got to say, is, we all have these different kind of stories that we connect with. And Barry's story is amazing. He went from having absolutely nothing. His mom worked in a sweatshop. His dad died when he was a little boy. They grew up in New York City. And he went from nothing to creating and helping and inspiring thousands and thousands of people. And I absolutely love those stories. So every time I'm around him, it inspires that little entrepreneurial fire in myself. And I get, you just want to make this person proud and you want to keep improving and keep going out there and doing what you do. And, he led me to believe in myself at the end of the day. And that's just amazing. He's an absolute joy to work for. Challenging, but a joy.
And don't worry, everybody on this or listening to this episode right now, we're all in the mortgage industry, so we've all had breakdowns before. And I know for me personally, like, and I'm not comparing myself to Barry, I'm nowhere near, but I know one of the first things that I tell people when we hire them is like, listen, I'm tough. Like, I'm not easy to work for. And people who want the best in you, it's not easy, like you said. And being that person is not easy. Constantly wanting to be better. I think it speaks to your character that you care, So tell me, speaking of that, were you always like a numbers person? Did you get interested in the economy or anything like that?
I'm definitely not a numbers person. Barry's really good at doing math in his head and crunching all these numbers. I can't remember a number, past a couple of days. I can't really remember a number, but I've always enjoyed looking at trends, and I've always enjoyed looking at data and understanding how it all works. I think that what really led to my curiosity of all of this is, as I mentioned, growing up, my mom was an originator, but I never really understood everything that was involved in it. And then when I started to realize that all of these things that happen, everything from COVID happening to lockdowns to bank failures to every little thing that's happening out there affects us on such a grander scale in so many different ways. And once I started to realize that everything is connected, it just sparks this curiosity in me that is just so fascinating. And so I'll be honest, do I really enjoy oftentimes reading these reports that are filled with numbers? No, but the second that I get curious about, okay, how is it going to affect the rest of the economy? That's when it just clicks and gets very exciting for me.
Right. So it's beyond interest rates. It's how
Yeah.
what the domino effect that happens. And I
Yeah.
also feel, maybe correct me if I'm wrong, I also think that you like impacting the people that you are delivering the information to.
100%. My passion and my purpose has never changed. At the end of the day, it's always to help people feel more confident and comfortable with what it is that they're doing. And it's just shifted forms.
Look at that. Came full circle.
Mhm.
So tell me about what is going on in our beautiful, our perfectly imperfect mortgage world when it comes to interest rates and inflation. What do you see on the horizon? You can even comment on what's happened over the past year or two or three. Give us a quick little, like, as if you were doing your morning update right now. Maybe not as in depth, but I'll let you decide.
Well, we got some good news last week with CPI, which is Consumer Price Index. That's a measurement of inflation, and it's starting to come down. And for those of you that don't know, it's inflation that drives mortgage rates. So as we see inflation come down, we should see mortgage rates come down as well. Now, inflation has been a little bit sticky, but in the next couple months, honestly, are going to be a little bit rough because the way that inflation is measured, whether you're looking at CPI or PCE, personal consumption expenditures, at the end of the day, what they look at is they look at the costs of goods from month to month, and that change gives us the monthly inflation reading. And then you add up the last 12 months to get that year over year number. Now, the reason that I say that the next couple months are going to be a little tough is because when we get that next month's number, the last one drops off, and the comparisons do get a little tough for the next 2 months. But we have an aspect that is riding in our favor, and that's the simple fact that different things get different weighting into that overall year over year inflation number. And one aspect that makes up quite a bit of core CPI is shelter costs. Now, in real time, we're starting to see shelter costs come down. Like when you look at Core Logic rents, that is coming down in real time. But the way that that data is pulled for CPI is it's lagging. And so while we have seen rental prices come down, the way that it's pulled within CPI, it's just starting to see it kind of crest over. So one aspect that will at least be beneficial to us because it has so much of the weighting is those shelter components within that CPI reading will come down. And so, we're hoping that we are going to see inflation come down and moderate. And with that, we will see mortgage rates come down as well.
I think the big question that everybody's asking is when.
It's tough to say exactly.
I feel like there's a few different camps right now. You have the camp that's like rates will come down next year, right?
Yeah.
And maybe there's a few that are like they'll come down this year, but rates, let's just group those together. Rates will come down next year. Then there's this other camp that I try not to listen to, that says, interest rates are here, 7% is here to stay. In fact, they're going to get even higher. What's your take on that? And by the way, you did a beautiful job of explaining what you just explained.
Thanks.
I think it's so important with this stuff. because we can all read the data and listen to the news. And it's funny because we can read the data, listen to the news, and come up with a completely different conclusion, each of us. I think it's so important on how you deliver that information. And that just speaks to your skill at doing that. So I appreciate that. But is it the camp of, are you in the camp of interest rates will come down next year? Don't even put a month on it. Or is it the next 2, 3, 10 years? What do you think?
No, I think they will come down sooner rather than later. I think that the Fed will come in next month and raise the Fed funds rate yet again. But we're starting to see a lot of recessionary indicators. And I really think that it's only a matter of time until we enter a recession. And if you look at history, mortgage rates also tend to decline during recessionary periods. And we have like our live monthly webinar, and we just had Edward Dowd on. And I really think that, I hope it doesn't happen, but we could likely see a lot more bank failures as well, which is going to cut into that recession even deeper. And, listen, I don't think that rates are going to get anywhere near where they were in the high 2s and the 3s, but do I think that mortgage rates could moderate before the end of the year? Yes, 100%. I do not believe that mortgage rates are going to get a whole heck of a lot higher. Simple fact, we are starting to see inflation come down. The bank failures, it takes time for that to ultimately flood into, slowing down the economy. Everything that the Fed's been doing, this has been the most aggressive Fed rate hike cycle in history. And it takes 12 to 18 months to see the effects of what they're doing. So we have yet to see all the effects take into place of all the actions that they've been doing. And so I believe that mortgage rates are going to come down before the end of the year due to that simple fact. And looking at history, and we can tell a lot from history. Is it ever going to be the same? No, but does history rhyme? Yes.
And do you think, so we hear every time the Fed gets up and every time Jerome Powell gets up and talks, he we're all happy to see that inflation is like cooling off, if you would call it cooling off yet, but let's just say cooling off. But then we look at the jobs numbers, and I feel like the Fed is hyper focused on bringing unemployment up. And that's not my take, but is what everybody says, right? Can you explain the relationship between the employment numbers and interest rates? Because I think most of us understand inflation and interest rates, but I think what's keeping interest rates propped up right now is the employment numbers. So can you kind of explain that relationship?
Yeah. So, at the end of the day, and a lot of people get this wrong, like, Janet Yellen's been out there saying we can't have a recession. Remember, a recession will bring mortgage rates down. But she's been out there saying we can't have a recession because the unemployment rate is so low. But it's when the unemployment rate is at its lowest levels and begins to tick higher that we see a recession. It's happened time and time again. And the unemployment rate is one of the last indicators to be seen before entering a recession. And if you look at it right now, we haven't started to see this turn, right? The unemployment rate has been coming in lower, especially the last report that we got. And everyone is confused by this. And listen, we thought it would turn a while ago. I got to be honest, we did. We thought it would turn a while ago, and it hasn't yet. But we're at a lot lower of the levels than we are on the higher, perch at this point in time. And if you think about it, this is the way I like to think about it. If business is good, right, what are companies doing? They're growing. And if they're growing, what do they have to do? Well, they have to hire more people. And if they hire more people, then that unemployment rate is going to go down. But the second that company starts to feel a slowdown, and we know that companies are starting to feel a slowdown because when we take a look at their meetings and look at the transcripts, there are a lot more mentions now. It finally eclipsed there's more mentions of job cuts versus labor shortages. So we're going to start to see this shift. But what starts to happen when that company starts to feel a slowdown? Well, they have to let people go to survive, right? And as they let those people go, those people then join the unemployment ranks, and we see the unemployment rate tick higher. Now, COVID messed up with a lot of this kind of cycle as well, because there wasn't, not too long ago, it was challenging to find and hire someone, right? So companies were terrified of letting people go. But we're seeing a slowdown, and they're mentioning more job cuts, as I mentioned. And this is going to be a fast snowball effect. It's not something that happens slowly, because think of it this way. If I lost my job, right, do you think that I'm going to go out and I'm going to go buy myself a pair of red bottoms, go on a 2-week vacation and go buy myself a new car? No, I'm going to, maybe, if I'm maybe, right?
Some credit card debt.
I'm probably not going to do that, especially not with credit cards being at 24% interest rate. I'm not doing that. I'm smarter than that. But what's going to happen to those companies? What's going to happen to that shoe retailer, to the car sales place? Well, they're going to start to feel a slowdown. So they're going to have to let people go. So it hasn't been reflective of it yet. But once this starts to turn, it's going to happen quick. And that's when we know that we're going to be entering a recession, because that's one of the last recessionary indicators out there. And again, as history has shown us time and time again, as we enter a recession, what happens to mortgage rates? They go down.
Yeah, the Fed is less incentivized to continue to hike.
Yes.
If the economy is doing poorly.
Yes.
What are some other recession indicators that you're looking at?
Well, there's the inverted yield curve. That is definitely a major one that we've been looking at. There's a lot of them. We've been watching mostly the jobs picture at the moment, which hasn't been in our favor, but the inverted yield curve, that's been a while. And I forget what the average time span is on that from when it goes inverted to when you see a recession, but we're getting close.
I feel like they've been talking about that for a while. So, and I think it's confusing to us in the mortgage industry, like that on how the economy is still doing well, because our industry was hit very hard, because we have a direct relationship with interest rates. And we're kind of like, all right, we're being hit hard. Our companies are laying people off. You see all these headlines in the mortgage industry, like, when does it start to trickle into other sectors of the economy? So I think just because we're feeling pain doesn't mean everybody's feeling pain. And I think you hit it right on the head, is like, it takes time for these actions to sink in. You're not going to see construction all of a sudden slow overnight because interest rates were hiked starting, let's say 12 months ago, whenever they started. So it's kind of interesting to watch all of this unfold. And I'm going to be honest, like, before COVID, I know me, I'm going to keep it on me, but actually I won't. I think most of the mortgage industry was not in tune with all of this stuff. Like, they were even less educated, because everything was kind of just normal. And I think during normal times, there isn't much to learn. And then COVID hits us, everything else that comes along with it. But aside from that stuff, what it was doing to our industry, I think there was a lot of lessons to be learned. And now everybody's like a financial expert overnight, which is one unfortunate side effect. But you got people like you who are delivering the real info. So I appreciate it. Now, a lot of the people that tune in are newer in the industry. And I know for me, I was just having this conversation with a friend the other day, and I was like, imagine being a loan officer starting today. If you're a loan officer starting today and you're hearing all this news, and you're listening to this podcast right now, and you're listening to Jerome Powell every month, what would be your advice to them to continue to, like, put one foot in front of the other and build momentum in their new career?
Well, what's interesting is I actually see sometimes right now, new loan officers bringing in more volume than seasoned loan officers. And I think that there's a reason for this because, if you've been in the industry a while, and it wasn't that long ago that many, if not all of us that are listening to this podcast right now, were bringing in the most production that we were ever bringing in, right? And we got used to that. Not only that, but we've been in the industry for so long, right? Like we put in our dues. It's supposed to get easier right now. But what I'm finding is the new loan officers that are coming in, they don't know, right? And so all they know is I have to build and I have to grow my business. They don't know anything different. And so they're going back to basics where some of the seasoned vets are refusing to do that. And so with that, you're seeing new loan officers having a greater opportunity right now. And what it is right now is that's what it is. At the end of the day, it's get back to basics. Most of the deals right now are coming in from referral partner relationships. So get out there and build referral relationships, provide value, make sure that you are going after agents that can actually give you business instead of the ones that do a deal once every 5 years, right? Make sure that you're using your time wisely, make sure that you're following up, make sure that you're providing value. And I think that honestly is the best place to be right now and the best place to start. But I think a lot of people are sitting there, it's stuck in the mindset of this market sucks. It's never going to be what it once was. I've put in my dues. You have to let that go. If you want to continue to be in this business and you want to continue to be successful, you want to increase your production levels, you got to get back to basics, whether you're new or old.
I mean, everything else going on in the world, you have no control over. Like, I can't force Jerome Powell to say what I want him to say next month.
Yep.
Right. So all I can control and all I can focus on, or all I should focus on, is my action on a daily basis. And like you spoke about, getting back to basics, getting back out there, forming referral relationships, and we can go on and on about how to do that. That's a podcast episode in itself. But I think there's a lot of people out there that are stuck in their head. And when I look at a successful person and a not successful person, the main difference between the two is they can control what's between their ears.
Yes.
And I say that being a person that used to not be able to. So it's not, I wasn't some strong-willed person and super disciplined, or came from a great family, but came from had the best upbringing. That wasn't like my case. But I think the faster I learned to control this, the better I was, the more consistent I was able to stay. And consistent action compounded over time, that's when you see results. So I think it's very hard to take consistent action if you're stuck in the negative or focusing on the things you can't control.
I think it's very true. At the end of the day, I took a Tony Robbins course, a live seminar that he did. And they say that you live in different kind of primal mindsets. And when you're stressed out, when you're thinking, oh my gosh, I still have to pay all these bills. I need to somehow pay for my kids' college fund. I need to somehow figure out to put money into my retirement. I need to do all these things. I need to do all these things. You're living in that primitive mindset. And that is the lowest form of mindset that you can live in. And listen, it's challenging when we're stressed, when we have to try and get by, when we have to do all of these things. It's stressful, but you have to figure out how to get past that. And one thing that I know that has helped me immensely in being able to do that is how fast can I shift into a state of gratitude? And it's hard. I still have to do it to this day when I'm finding myself being, grouchy and down about my life and down about
grouchy.
I can be very grouchy, yes. But I have to pause and I just stop everything that I'm doing. I have this document in my Google Drive and I just sit there and I list out everything that I'm grateful for. And it can be the smallest of things, the cup of coffee that I had, the cuddles that I got to have with Snoop in the morning, whatever the case may be, I just sit there and I list them all out. And that is exactly what I need to shift from being stuck in that negative mindset to being more positive. And another thing that is really helpful is just remembering what your purpose is, right? I actually was feeling like this not too long ago. And what I ended up doing is I ended up going through and deciding what are my values. And I narrowed it down to my 3 top values: entrepreneurship, service, and integrity. And whenever I get into kind of that negative mindset, I remember what my purpose is and I remember what my values are. And then if it's even that I have 8 hours of demos that I have to do that day, I'm not feeling good, my throat's scratchy, I'm tired of talking to people, I remember, oh, I get to live by my values right now. I get to live out this part of me, this servant leadership. And that is just enough sometimes to get me back into that positive mindset. Because I'll tell you, if you're sitting there thinking about how shitty the market is, how this job sucks, how stressed you are, your clients are going to feel that. Your brain is affected in so many ways that you're not going to be able to serve them and serve your purpose, which at the end of the day, ask yourself, why the heck are you getting up every single day, putting yourself through this level of stress? I'm guessing for a lot of us, it's simply because you enjoy helping people reach financial freedom through the use of home ownership. You have to remember that. And you have to remember that all these things that you might not like doing, as long as they align with your values, you're moving in the right direction.
And speaking to the other side of it, not only do you get like caught up in the things you can't control and you start being negative, I think there's a lot of loan officers, real estate professionals in general, that deep down don't believe it's a good time to buy a house. And that comes out in their conversations, and the universe feels that, or whatever you believe in. And they almost take less action because they don't believe in this product or service right now. Why is it a good time to buy right now? Or why is it let me rephrase that. Why is it a good or bad time to buy right now?
Well, here, does this podcast episode have video on it?
It will, yeah. It's posted to YouTube. By the way, if you're listening to this on Spotify and Apple Music and all those good stuff, you can watch the video on YouTube.
I'll explain it to you. You have to enable screen share for me though.
Let me do that right now.
But at the end of the day, purchasing a home, generally speaking, when we look at history, has always been a good idea for financial opportunity. And I will show you guys why. What?
I guess I'm going to make you the host. Let's try that.
All right.
So look at this. I was not expecting this. Thank you, Megan. Appreciate it.
No, well, I love this. And it coincides with exactly what we're talking about right now. People start to formulate beliefs, right? That now isn't a good time to buy. And when you brought that up, it reminded me of my best girlfriend out in Florida. She's a real estate agent, and she didn't believe it was a good time to buy a home. And so it was very hard for her to make a transaction. But oftentimes when we feel that way, it's simply we have to educate ourselves and we have to use history to change our perspective. So let's break this down on why you don't want to bet against the champ. Okay, everyone likes to, clients, you name it, LOs, agents, they look at how much homes appreciated from 2020 to 2022. And they say, you know what, that can't be sustainable, right? Home prices have to come down. But if we look at history, let's look at 1943 here to 1947. Home prices compounded 118%, and then they went up for 43 straight years after that.
Wow.
And again, if we look at 1974 to 1979, prices compounded 93%, and they went higher for another 10 years before only going down 1% in 1990. And then they went up 14 consecutive years after that. Now, everyone likes to focus on the housing crash, right? That's what we remember. But you don't want to bet against the champ. When we take a look at every single report out there that gives us home appreciation, Case-Shiller, FHFA, CoreLogic, Black Knight, Zillow, they're all in the positive right now, and they're increasing. There was an inflection point in January. Listen, due to the fact that rates got rather high rather quickly, we did see on a month-to-month basis some negative appreciation. But if you look at how it is formulating and how it's panning out, listen, it is a great time to buy a home. It's always been a great time to buy a home for the most part, except for those few times in history. Going back, looking at 1972. I mean, homeownership has always been such a great investment, and you have to really believe that.
Right.
And if you don't, look at history, gain some knowledge to change your perspective so that you can really come from a place of servant leadership when you're talking to your clients.
That's huge. I think it's a good thing that, listen, if you're on the fence about whether it's not a good time to buy or not, I think I'd rather have an industry that cares about the consumer and keeps that in mind, and almost shoots themselves in the foot because they don't believe it's a good time. However, if you actually look at the data and you're that type of mortgage pro that's gonna have the desire to be better and to understand things and to hone your craft, like we spoke about earlier, you're gonna look and hear from people like Megan and be able to communicate that message to your clients. And I think that's part of the reason why it's so important to continue to learn and invest in yourself. Not only does it help you, but it also helps you help your clients.
Not only that, but inventory is so tight on a national basis, yet we have growing demand that, naturally home prices aren't going to be able to come down. The simple fact that we do not have enough supply out there to meet the demand, basic law of supply and demand. So if you understand that, you have to believe on some level that purchasing a home is a good idea and a good investment.
To me, even if you spoke about that year, I think it was 1990 something, where home values went down 1%, and then the next year they stayed flat. If that happened right after I bought a house, I would not be upset. Even if they went down 3%, whatever it may be, if they went down a little bit, because if I'm buying a house, I'm going to stay in it for a few years. If I buy a house with a 7% interest rate and rates come down to 5%, I'm able to refinance. I think there's a lot of different, if you took the time to educate yourself and actually did the math, right? Because there's a lot of loan officers right now that are saying to themselves, I wouldn't buy a house and spend $4,500 a month. Well, that's because your mortgage payment's $3,200, right? And you're also not looking at apartments that are $4,000 a month or $3,000 a month, right? So I think putting yourself in the client's shoes as well and really helping them make a decision that's good for them. And it also comes down to, I'm never ever, like when clients ask me, should I buy a house right now? I don't tell people if they should or they shouldn't. That's not my job. I let them know the math and I let them make a decision. And if they want to ask me my opinion of the market and what I think will happen, I kind of refer back to what Megan is talking about, or people like Megan, and just kind of regurgitate that information. So if that's all you can do right now, I think that's more helpful than a lot of people can be. So I didn't expect to get a full few slide presentation out of you today. I appreciate it.
Of course.
And any final words for the loan officers right now?
I just want to say, keep going, get back to basics. You've got this, educate yourself, be a forever learner. At the end of the day, when you think about the doctors that you want to go to, the people that you want to work with on different things, you want to be going to that forever learner. And you're good enough for that. You are.
Thank you, Megan. I appreciate your time today. I think everybody got a lot out of it. I know I did. So I appreciate you.
Thank you.
Cool.